Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk this afternoon, we have Andy Baehr, Managing Director at CoinDesk Indices, Stephen Ehrlich, Director of Research of Digital Assets at Forbes Crypto, and Jay Jacobs, U.S. Head of Thematics and Active Equity ETFs at BlackRock, to discuss the significance of spot Bitcoin ETFs arriving in the U.S. and what it means for the broader digital asset space. Gentlemen, it's great to have you with us. Welcome to Trade Talks. And Andy, it's finally here. We got the approval. I want to talk about Bitcoin and just a general market update overall. The reaction was somewhat muted to the biggest event in nearly 15 years.
Jill, we all gathered around our screens and watched the season finale of the crypto winter together. And as the season finales go, it didn't disappoint. There was the intrigue of the purportedly hacked SECx.com account. There were the kind of he said, she said statements by SEC Chair Gensler and Commissioner Pierce. When trading started, it was vibrant, it was orderly, and we watched the ETF industry and the digital asset industry do their sort of very well-rehearsed production number. We had some great inflows. We had some good price action. Dire predictions about Bitcoin crashing as in the sell the news event didn't really happen. We've seen strong support at the $42,000 level since then and over the weekend, although our trend indicator kind of came back one notch from strong uptrend to uptrend, but we still have a very positive outlook, and it was a great way to end the season. Right,
and Stephen, of course, to Andy's point, the fact that it was orderly really lends to the institutional theme behind it.
Yeah, I think it's hard to categorize the ETF launch as anything but a strong success. I mean, as Andy mentioned, the prices pulled back a little bit. I mean, it reached as high as, I think, 49,000. Now it's down to around 42 or so. And I don't think that's too surprising probably to us. I mean, Bitcoin does have a history of selling the news, buying the rumor. And I think longer term, especially the next 3 to 6 months, once the RIAs and asset managers start funneling customer funds in, we're going to see that move upwards. But it really is just kind of funny how much excitement about this came about. And I think that kind of it's best reflected in what Hester Peirce, Crypto Mom, one of the SEC commissioners that's most friendly to Bitcoin, said in her statement after all the ETFs were approved. I mean, basically how much Gary Gensler, the SEC chair, was vehemently against all of this, created this hoopla around an event that perhaps could have been a little calmer had it not been this toy that the dog was not able to catch. And now that we're here, things are working fine, and now we're looking at the halving and sort of what's next for Bitcoin, knowing that at least it has this one particular stamp of approval.
And Jay, of course, congratulations on the approval for the BlackRock ETF IBIT. Tell us more about the ETF itself, what it's providing for investors, and some of the methodology behind it.
Sure. This is really about three things. It's about access, it's about convenience, and it's about quality. So access, think about how people were getting exposure to Bitcoin before. They usually had to buy it through crypto exchanges. That meant some people just couldn't do that. They weren't set up operationally to do so, or it just wasn't a preferred method because we know there's some complexities around owning crypto directly. So the ETF really brings access to people who may already own Bitcoin or people who would like to own Bitcoin and get it through the access of an ETF. The second piece is that convenience. So there are tax complexities with owning crypto directly. There are some operational complexities around custody, thinking about hot wallets, cold wallets. All of that is essentially outsourced to the ETF, to BlackRock to manage for you, which a lot of investors appreciate. And then thirdly, it's about quality. It's really about BlackRock being behind IBIT. The same infrastructure that we use to manage 1,300 ETFs globally, over $3 trillion, we have applied that infrastructure to IBIT. So it's really taking our scale and our legacy in managing ETFs and applying that expertise to a Bitcoin ETF.
Yeah, and of course it's familiar to investors and to advisors, and everyone's looking for alternative asset classes. So it makes sense in terms of how you think about portfolio allocation. How is the ETF actually managed, though?
Well, we invest in Bitcoin. It's really as simple as that. And an analogy I like to look at is gold ETFs. They've been around for almost 20 years. Similarly, people are investing in a fund that is getting direct access to an underlying asset. We are doing that with Bitcoin. We are investing directly in Bitcoin. That will give people very precise exposure to the spot Bitcoin movements that you're seeing online.
Andy, how would this impact the index business when it comes to digital assets and Bitcoin in particular?
It's great that BlackRock and Grayscale and the other issuers are out now explaining how Bitcoin can help contribute to a portfolio. A lot of digital asset investing started almost as a hobby for some folks, right? It started on the retail individual basis. People did it because they wanted to, not because it was part of their real financial planning. Now that these ETFs are in place and there's a lot of good advisor talk and a lot of research out, it's almost as if people are going to really have a great opportunity to learn more about digital assets. What they will find eventually is that there are other digital assets that make a lot of sense. There's diversification benefit available. We feel that it's a great time to announce to the investing public that the digital asset class is alive and worth really knowing about. And on that basis, we launched today the CoinDesk 20 Index, which captures the performance of top digital assets. And on top of that, the CoinDesk 20 is designed for trading. The Bullish Exchange launched futures products on the CoinDesk 20 Index, and they've traded in their first day over $10 million worth among institutional traders. So we're trying to do what the house of Nasdaq that we're sitting in right now did a long time ago, which is begin people having access to an asset class like the triple Qs, right? Where you start with institutional provision of liquidity, that finds its way to market makers, to hedge funds, to the options market. People understand that something's liquid. It's a way to express a view. For QQQ is the future of tech, and for CoinDesk 20, it's the future of finance. So we're really excited about that launch, and when BlackRock is ready to add diversification to the things it wants to talk about, CoinDesk 20 is ready for you.
Well, that's a perfect segue, Stephen. Do you think we can expect another ETF with a spot underlying asset?
Yeah, I mean, BlackRock and I know Grayscale and plenty of others I'm forgetting about have already applied to launch spot Ether ETFs. The SEC allowed spot futures ETFs to begin trading last year, and there's going to be plenty of others that are doing that. And really, in some ways, it gets the cat's out of the bag to some degree. And speaking about the importance of diversification, I mean, there's much more than Bitcoin and Ethereum and its native token Ether and plenty of other associated assets, the liquid staking tokens, some of the layer 2 scaling tokens. I mean, Bitcoin is up only about 1% so far this month. These other tokens are up sometimes as high as 80% on the month because of expectations that the SEC is going to approve this ETF and legitimize Ether and then perhaps many other tokens for the broader investing public. It's actually kind of funny though, when we talk about the significance of the Bitcoin ETF, in some ways you can make an argument that an even bigger event is happening a few miles downtown, where Coinbase is currently in a hearing against the SEC regarding the SEC's lawsuit against Coinbase, because the Bitcoin ETF is really just about one asset, whereas if the SEC allows Coinbase and Kraken and other exchanges operating models to sell multitudes of tokens, all of those could then be funneled into ETFs and diversified products like yours, which is right now not available in the United States for securities reasons, I would imagine, and that could even be more significant.
Yeah, well, it changes the model for these exchanges if access to the digital asset space is available via an ETF.
Steve makes great points that Bitcoin is an important, it really is the first digital asset people should come to learn about. It's pretty simple. It has a pretty solid and easy to understand macroeconomic model, which I think BlackRock articulates very well. It's a simple blockchain. It functions as a currency, as a store of value, and it has kind of sensitivities to certain macro principles. So it's a great place to start. Even taking Ether, the other large, predominant and second oldest digital asset, has a completely different investment case. It actually has a yield inherent because providing security to the network earns you Ether. So it actually has a monetary policy. It has a growth policy. It has a network that stablecoins and other tokens use to do transactions. So the immediate diversification, even between Bitcoin and Ether, provides two different avenues. Same blockchain idea, but totally different investment cases.
Yeah, I mean, the value propositions are completely different. I mean, Bitcoin's seen as digital gold, and one of the big criticisms is that it doesn't bear any income. It doesn't provide any yield to investors. Ether and Jay, as you know, plenty of these other assets, they all offer, because they're stakeable, passive income, which is something that's very important, not just for investors to grow wealth, but also I think it helps models for financial professionals kind of understand how these monetary systems work so that they can project out future valuations, future earnings, and make it more of an apples to apples comparison for their clients.
Yeah. Jay, what do you think the overall implications are to the digital asset space?
It's still very early. I think the important thing here is that now there is access to Bitcoin through the ETF structure. This means that some people will now have access in a way that they haven't had before. They can maybe start their educational journey about Bitcoin. And so I think we're really kind of at the tip of the iceberg, and I think it's a really exciting moment. It's an exciting moment for IBIT, but this is really just kind of the starting line for accessing Bitcoin through an ETF.
It seems as if the correlation has also shifted with Bitcoin and other digital assets as well. When we start to hear economic news come out, or whether even Bitcoin had that relation to what was happening in the tech sector at one point. It feels as if it has. I mean, it's only been around for 15 years. That's really fast for an asset class to mature. I mean, stocks have been around late 1600s, early 1700s, so it matured pretty quickly for what started out as really a retail trading vehicle.
It did. I mean, if you're comparing it to gold, you have thousands of years of history versus 15. And I think the importance here is for investors to think about, does this fit in my portfolio? And if so, how much? Because it's not going to be for everyone. This is a unique asset. It has a lot of risk, it has a lot of volatility. Its correlations are pretty different from stocks and bonds and other pieces of investors' portfolios. So the onus is really on the investor to decide, does this make sense? And part of that is considering the shorter history of Bitcoin.
Right. I mean, you could also make the same argument with other alternative products as well, whether it's private equity, private credit, real estate, whether you're investing in wine or art. I mean, it probably shouldn't be such a big part of your portfolio, and those asset classes are not liquid, such as a Bitcoin ETF would be. So if you think about it in terms of diversifying away from 60-40 or adding an alternative investment piece to your portfolio, it makes as much sense as it does with the other alternative asset classes.
I think that's right. I mean, everyone has to look at these asset classes separately. I think the benefit of an ETF is the liquidity it brings, and we know that people want differentiated exposures. They also like liquidity, and so Bitcoin being able to provide both through the ETF is an important value case.
Mm-hmm. Yeah, I think the correlation point is really interesting too, because I mean, as we all know, Bitcoin was highly correlated with tech stocks and stocks in general during COVID, and I think that really broke down, especially in November 2022 when FTX collapsed, and then it kind of carried forward in 2023, the beginning with a January rally, and then the regional banking crisis, and then when you guys, BlackRock, filed for the spot ETF in June, all of a sudden Bitcoin went up, even though the rest of the market was kind of slowly going down, and it's really kind of, it broke its correlation with stocks over the last year, and I would imagine that it's going to be a bit of a seesaw moving forward. There's going to be times where it's highly correlated with traditional markets, especially as institutions come in and more traditional brokerages come in. But there's so many like idiosyncratic events that happen in Bitcoin, like the halving, for instance, is another one. And there's going to be other things that it's always going to be an important diversifier tool. It's just a matter of sometimes picking the right time. But the good news is for people watching, people listening now, it's still, despite Bitcoin being around for 15 years, it's still so early that if investors are able to sort of stake their claim to their little bit of that 21 million unit empire, they can kind of ride that out over the next 5, 10, 20, 50 years.
So Andy, how will the halving impact Bitcoin, or will it at all?
Stephen made great points. The halving has traditionally been a source, and let's explain what the halving means actually, right? So the consensus mechanism of Bitcoin is miners coming in and devoting computing power to basically securing the network and creating new blocks. They're rewarded for that by receiving Bitcoin. Every couple of 10,000 blocks, every big chunk of time, the amount of that reward is put in half. And that was part of the original design code of Bitcoin. The next halving event is expected in the spring. Traditionally, that is seen or interpreted mostly as a sign that the amount of Bitcoin is shrinking, right? That the inflationary process of Bitcoin rewarding miners is decreasing. And so that's usually been a bullish event. No guarantees it's a bullish event this year, but this is how it's performed in the last year. I think Stephen, your point earlier about individual Bitcoin-specific events like news or the halving are good short-term signals. As we move away from that, we think Bitcoin observes time series momentum trend very strongly. So we have a trend indicator. That's a really good medium way to at least know where the trend signal is pointing. And then when you look long-term, look at macroeconomic signals about expectations for interest rates, expectations for inflation, and you can get more of a market life cycle look at where Bitcoin can go. So as you're evaluating, if you want to add Bitcoin in a small percentage to your portfolio to provide diversification, and you're thinking about its short, medium, and long-term prospects, those are kind of interesting things to look at.
Right, and speaking of the macro, I want to shift gears for a moment here. Jay, let's talk about some of the thematic outlook points. There's 3 key themes that BlackRock is focusing on here. Give us some background behind that.
Yeah, absolutely. So I guess to transition a little bit, we think about Bitcoin and blockchain specifically being one of these early stage technologies that is likely to accelerate over the coming decades as people understand this technology, costs come down, and the quality improves, et cetera. But there's other themes that are happening around the world that we are keeping our eye on. So the first is artificial intelligence. One of the major themes of 2023, what does this mean for 2024, is really going from proof of concept to something that is really going to be commercialized by major companies. This means that while people may have used ChatGPT or other generative AI platforms, now we could see governments, we could see companies, and we could see individuals really spending significant amounts of dollars to integrate AI into their processes. So that's one thing we're looking at. Number two is really looking at healthcare innovation. So 2024 will be the first year where there are more people over the age of 65 in the United States than under the age of 15. This is a major shift over the last 100 years, an aging population that's not just happening here, but is happening globally. And the impact of that is really on the types of medicines that are going to be demanded by the global population. Things that treat Alzheimer's, heart disease, Parkinson's, other advanced stage-related diseases are going to be in more demand starting next year and beyond. And then finally, we're looking at geopolitical risk and supply chains. We see it playing out just recently. Shipping costs have been really accelerating again with supply chain disruptions. There's been a major effort in the United States to build more here, things like the CHIPS and Science Act, the Infrastructure Investments and Jobs Act, the Inflation Reduction Act, bringing hundreds of billions of dollars into U.S. manufacturing, trying to bring supply chains domestically, and to partner with countries like Mexico and India to feed into that supply chain.
Yeah, I mean, certainly interesting themes. Any way that they correlate to digital assets as well?
I think so. And I think in some ways it's hard to underestimate the impact of all the potential regional conflagrations right now. I mean, Iran launching rockets into Pakistan and I believe Iraq, and then obviously the Houthis in the Red Sea and the Strait of Hormuz and Israel. And as Jill, as you know, I used to be an intelligence analyst for the Pentagon, so this is right in my wheelhouse. But we're still in a very precarious situation, especially when it comes to inflation. I mean, I think many people were upset or disappointed in the print that came out for December. And I was looking at the CME FedWatch tool on the train right up here, and already expectations for a rate decrease in March have dropped, I think like 15 to 20%. And I would not be surprised if that happens even, if that drops even further as we get the January readings next month and so on and so forth. And if just one of these hotspots sort of flares up, energy prices go up and so on and so forth, I mean, that can have global macro impact, which would theoretically then potentially impact Bitcoin. I know some people say Bitcoin is great during a bull market, it's great during inflation. Kathy Wood has told me Bitcoin is great during deflation, but during times of crisis, everyone seems to go to the dollar right now anyway. So,
right. We've certainly seen an uptick in the dollar, and what's so interesting, what's good for the economy isn't always necessarily good for the market because it interprets the data points very different. And to your point, Stephen, Fed Governor Waller came out yesterday saying that rate cuts won't be rushed.
Yeah, and Christine Lagarde, the ECB governor, I think said today or yesterday that any rate cuts in Europe are going to likely be pushed from the spring to the summer. So we're already seeing some of that movement.
Yeah, it's going to be interesting to see how Bitcoin, if it does or doesn't, reacts to, because we know this when it comes to cross-border payments. I mean, this is really one of the genesis behind digital assets is so that you don't have these inflation fluctuations, so that you are able to transact business, so you are able to grow local economies that never had the opportunity to do so before because there's alternative, digital economies that are able to be built around it. We tend to think so US-centric, so Western-centric, where there's billions of people around the world who are transacting like this.
They sure are, and it's a great. If you want to talk about Ethereum, for example, right? The network that supports a lot of the transactions from other protocols happen on Ethereum. So if you look at other layer ones, Solana, and Cardano, that all support these kind of transactions. They don't necessarily reflect their own tokens activity, but they welcome other use cases onto the platforms. Just another sector within digital assets that really has growth potential based on new use cases, right? So we've been stuck in a narrative of above the fold, putting bad people away and getting regulatory approval for stuff, right? That was the last season where we had the finale with the ETF launch. I mean, it was a great season of entertainment. Now we want to move forward and see what are these new use cases. And we understand Bitcoin's use case pretty clearly. Let's see where we can move on from there. Entertainment, social, metaverse, smart contracts, money movement, all of these things that are, represent well-funded projects, and the best ones will rise to the top.
All right, gentlemen, we will leave that on a positive note. Thank you for joining us on Trade Talks, and thanks for joining me from the Nasdaq Market Site. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.